filed this week alleges 22 Wall Street names were involved in a, quote, massive conspiracy to rig the $12.5 trillion Treasury market. The state Boston retirement system, that's a $4 billion retirement fund, claims that traders colluded to keep prices of government debt artificially low. Here's the response from the Department of Justice. The DOJ will neither confirm nor deny whether this is under investigation. We've also reached out to different banks involved for comment. Joining me right now is Michael Stocker. He is a partner at Labaton, Sucharow, joining us right now for the firm representing the Boston retirement system, joining us in a Fox Business exclusive. Michael, very good to have you on the program today. Thank you so much for joining us. Tell us exactly what these firms did, according to your lawsuit.
Well, the scariest thing about this case is that it's about collusion and trickery in what should be the most boring market in the world, which is the auction market for U.S. Treasury securities. The case really involves the participants in the market who are investment banks who act as primary dealers. And these auctions exist so that the U.S. government can borrow money at rates as cheap as possible. And the way that the primary dealers make money is by first selling auction securities in a kind of pre-auction market called the when-issued market for as much money as possible, and then covering their sales by buying in the Treasury's auction for as low as possible. That's legal. That's the spread that they make.
Right. But you're saying they got together and they talked about where the market should be.
That's right. And what they did is they colluded so that they drove that spread much wider. They got the participants in the when-issued market to pay too much for the treasuries that they bought, and they also drove down the prices at the auction that they bought. And as a result, both the participants in the when-issued market paid too much, but also the U.S. taxpayer ultimately is bearing the burden of higher prices to service U.S. debt.
You talk about this market being boring. How about safe? I mean, this is a market that most individuals believe is really safe, the Treasury market taken.
And critical to the overall health of the economy. Have you been in touch with the Department of Justice? Have you been in contact
with
them?
We have not been in direct contact with the Department of Justice, but this is certainly an area that the DOJ is very familiar with, because one frustrating thing is we've seen this kind of case erupt over and over again in the last few years. You had it with LIBOR, the interbank lending rate manipulation case. You had it with foreign exchange rate manipulation cases. This is like whack-a-mole, with the regulators finding the same kind of facts over and over again. And the reason is because you have investment banks who are both players in the market, also occupying a kind of quasi-regulatory role in setting prices and rates. It's like giving a quarterback the ability to also be the referee in a football game. The game's going to be rigged before it even begins.
Do you anticipate other investors joining this lawsuit? Because it would, if it was obvious, you would think that other investors would know what was going on.
That's right. In fact, I think many more investors are going to be bringing suit. Most of those cases are going to be brought here in New York, where those cases will likely be consolidated, because this is the financial capital of the United States.
Well, let me ask you this. I mean, when you look at, how they did it, I was reading your suit, and they were basically, you're saying, colluding because they were doing instant messaging, talking to each other, and you're saying all these 22 banks were involved?
That's right. And so this is actually very much like the FX case, like the LIBOR case that you guys may have heard about. What was happening is traders were exchanging confidential client order information using things like chat rooms and email in order to collude on both sides of that spread.
Wow. Michael, good to have you on the program. We'll be watching this important case. It's certainly important as investors view this market so safely. Michael Stocker joining us there. We'll see you soon, sir. Thank you.